Hey, Joe Lubin here. Welcome to this month's Inside Track. And as we get closer to the end of the year here, it's time to think a little bit about some IRS issues. I know it's early, but we still got to do some planning. So this is from actually my CPA, Haney & Company, and it's worth sharing. It's kind of 10 red flags to sort of avoid. As you've heard me say before, the biggest enemy to wealth in America is actually taxation. Second is inflation, which is owning a home is obviously a hedge against inflation. So these red flags actually kind of tie into a lot of the things that a lot of us have done, like owning property and some of us being self-employed, et cetera. So let's just take a look at these real quick. I think you'll find them helpful. Again, these are 10 red flags for an IRS audit, which if you've been through the process like I have, you don't want to be audited by the IRS. Not fun. So real quick, large charitable deductions or donations, I should say. For those folks that tithe and your wage earners, really nothing to worry about here, but where it gets tricky is if you have gifts of appreciated property and you're going to donate something like that of something that you claims or that's appreciated, you just got to make sure that you have that documented, which means like an independent appraisal is a good way to go. So that's going to be more like real property, right? Gambling losses, not too worried about those. If you have a gambling problem, probably can't help you there, but you got some interesting ideas on that. Unreported income, this is pretty common, and it's not really done on purpose, but what happens is that a lot of folks don't realize there's some income or dividend type income that kind of falls through the cracks. So because we get the 1099/DIV or INT dividend or interest, those usually come out later in the year. And so sometimes folks miss those forms. Those usually come out around March timeframe. So if you get your taxes done early, make sure that you contact your investment house and make sure you have the 1099 div or interest income to declare that. Otherwise, that will go to the IRS. That they will flag you for that. So heads up on that. Next, rental income. This is pretty common, right? If we have rental income, we obviously want to write that off, but we also wanted to do things like depreciation and other losses. Where you get into trouble is if you have more than $25,000 offsetting the income. So if you have your rental and you rent it for $2,500 a month, that's $3,000 or $30,000 a year. But you try to show bigger losses, like more than $25,000 loss, like you put $50,000 to improve the property, that's going to flag you. So be careful on that. Also know that does cause problems when we go to get your taxes to get you approved for your next rental property. If those losses are too big, that goes against the rental income. That can get a little tricky. So don't get too carried away with writing off losses on rental income. Home office deduction. If you're self-employed, generally 10% of that space is deductible. You're fine. The biggie here is employees who work from home. You cannot claim that as a deduction. So if you've been working at home, but you're not self-employed, but because of COVID, you've been doing days in the office and then days at home, don't try to deduct that. They will flag you for that. A couple other things, casualty losses, we're not in a disaster area. It doesn't really apply to us. Business vehicle expenses, if you try to do double-digit depreciation on a truck or something like that, that can get you in trouble. And then these last 3 or 4 are kind of fun. If you've been trading the cryptocurrency, doing any day trading, or you have foreign bank accounts more than 10 grand, be careful. These are areas that can get you into trouble as well. So anyway, hope this helps. This is where you can find it, Haney & Company or HaneyCPAs.com, red flag audits. You can reach out to me. I can send this to you as well. Hope that helps. Have a fantastic month. We'll talk to you soon.